Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Scott Augustine of Augustine Surgical. Scott, thank you for joining us.
Well, thank you, Hall, for having me.
Great. So what was your background before joining Augustine Surgical?
Well, I'm a doctor by training, anesthesiologist. And when I was a resident in anesthesia training, got interested in medical devices because many of what the equipment that I was using was not working. So kind of migrated from practice into being an inventor and product developer over time and serial entrepreneur. I've been reasonably successful as an inventor with something over 200 medical device patents now, and have been a serial entrepreneur since 1987. So I've got a bit of a history in this line of work. I grew my first company from 75 million, which I started in 1987, grew it up to 75 million and sold it for about 225 million. So first run was quite successful.
Well, that's great. Well, you've been in the industry for some time. For those investors out there, what's your advice to them about investing in the medical device space? What should they think about before they write that first check?
Well, the medical device is pretty unique, as I think most people know. You have to be in it for a little bit of the longer run, I think. Not necessarily the 20-year run, but not the 3-year run either. Nothing happens quickly in our space. Medical device developments take time, usually more time than developments in other spaces. There's regulatory that comes with it. And while in some products, regulatory can be a huge hurdle, if you choose the product lines that you're investing in correctly, they don't have to be, regulatory does not have to be a big issue. I think, though, that like with all investments, look for a favorable risk-reward ratio. And medical devices come in all different forms. Some are really significant improvements. Some of them are minor improvements, and some of them are not improvements at all. So first ask your question, does the device do something safer and more effective than the incumbent technologies? Doesn't have to be cheaper, but ideally it is cheaper also. Have the risk factors been overcome? Has the product been developed? Has it been manufactured at some reasonable quality standard? Is it past regulatory, or is it still hung up in regulatory? Does it need to have reimbursement? Reimbursement is a huge issue in our industry. If you need reimbursement, that can hold up significant sales for a long, long time. There are huge categories of products, though, that don't need reimbursement if they're sold to the hospital. And specifically, like our products, we always just bundle them into the cost of doing surgery. And so we don't have specific reimbursement on any of our products. And then there's the issue of safety and effectiveness research. It's difficult to launch a product in the market without published research showing that it's pretty good. So that's kind of the standard things that I would look for. My general advice, and it's a little bit contrary because the sexy part of investing in our business is going for the cure for cancer and the like. But I advise not swinging for the fences. If you're going to try to cure cancer, it's really, really expensive to do and has many opportunities for failure along the way. And then the final thing is kind of a binary decision where you go to the FDA and either your data is good enough or it isn't good enough, but you might have 100 or 200 million invested at that point to find out that your binary decision went against you. There are many, many smaller niche opportunities for product improvements that maybe only supply a $200 million to $2 billion market, if you call that a niche or not, but much easier to attain, much easier to attack, much easier to solve, and much, much lower risk. So I'm in favor of going for the smaller opportunities. They're still plenty big and much easier to do.
Well, great. Well, so how is the medical device industry evolving? What are the growth rates and how is it moving forward?
Well, I think as an industry, it kind of got off of the radar screen a little bit for the last 10 or 15 years as some things got more difficult and product development got slower, and it became harder to get products in because of more barriers to entry. Various group purchasing organizations getting interposed between you and the customer, doctors losing some of their influence on the purchasing decision. I think it lost some of its luster along the way, but all of these problems can be overcome, and the final outcome of a successful product is still creating tremendous value. So while I don't believe it is has the luster that as an industry that it had, let's say 20 years ago, it still has huge opportunities. You just have to bear in mind that there are some drawbacks with it as well.
That's great. So what are the challenges in starting a business in the medical device sector? You talked about the need for reimbursement and validation and so forth, but what else would you tell us about?
Well, one of the commonly quoted challenges is regulatory, particularly the FDA. And while that is very true that it is a challenge, for most products, the FDA is not a hindrance. You got to build in a certain amount of time to get through the FDA, but it's not an impossibility, and it's not like a binary decision that you might get locked out of the market. So for many products, especially those doing the 510K route, regulatory just doesn't have to be an impediment. If you've got something that's fundamentally new, if it's implantable, if it's life supporting and the like, so you have to go the PMA route, then that becomes much more problematic, and the FDA can, in fact, be your hurdle to not making it to the market. The other part of medical that's just part of medical is resistance to change. Doctors don't like new things fundamentally. They are comfortable with what they do. They think what they do is pretty darn good, and they don't really want to mess with it. So you can't come out with something new and expect everybody to rush off to the store and buy what you've got. It takes time, a tremendous amount of inertia to overcome that. That said, once you overcome it, a product can last for 20 and 30 years. My first product, called Bair Hugger, which was forced air warming for patients during surgery, 30 years later is still the standard of care and used on virtually every surgical patient around the world. It's just crazy how long products last and how few new things come out to replace them. So the challenges also result in long-term lifespans for products. Now, that doesn't mean that any company that develops the product is going to run it for 20 or 30 years, but it does mean that acquirers will pay a premium price. And in our industry, even what I would call pretty mediocre products have lately been acquired for 8 to 10 times sales, which is a very high premium, I believe.
Well, that's great. So how does Augustine Surgical fit into the overall medical device landscape? Where exactly do you guys fit in, and what do you do?
Well, going back to my brief story about my history, is I invented the solution at that time for warming patients during surgery. Prior to that, nearly every patient was cold during surgery because under anesthesia, you become a poikilotherm, you become a reptile, and you will gain or lose heat depending on the temperature of the room you're in. And since all operating rooms are air conditioned, nearly every surgical patient comes out of surgery hypothermic if they aren't actively warmed. Well, back in the day, that was not thought to be a problem, other than that patients' teeth were chattering and they were violently shivering when they woke up. With further research, it was found out that hypothermia had all kinds of adverse effects, like more bleeding and more infections and more heart attacks and more death and longer hospitalizations and slower recoveries. And all of these things were due to hypothermia. So that line of work, in other words, treating patients for hypothermia, has become kind of a big deal. And my initial product became the standard of care. I left that company in the early 2000s, and we went on to develop other products, but got interested in getting back into that business when we came up with an alternative way of doing it. The first way was with forced air warming, basically an inflatable blanket that we'd put warm air into, and that would go on to the patient and create a little warm room around them. It worked okay. It worked much better than what had been previously available, but it was not great. Still, many patients came out hypothermic. And so I got interested in electric warming. So basically electric blankets and mattresses, but they can't be using electric wires. We use conductive cloth and have developed a product that we call HotDog, which is right now the only safe and effective electric product on the market that includes blankets. There's a couple of companies making mattresses, electric mattresses, but you need both a mattress and a blanket to really warm a patient, and we're the only ones that have solved the blanket problem. So we're back into patient warming, but we're using an electric technology rather than forced air.
Sounds like a very much needed product in the industry today. What's the next step for you guys?
Well, we need to get forced air out of the market for starters, because it's the dominant player and customers are used to using it. So what we're playing on is the fact that we're safer, more effective, and more cost effective. And in particular, the safety issue, I already addressed more effective because we heat from above and below. We're roughly twice as effective as forced air. But the safety issue has turned out to be a pretty interesting thing. After I left the company, it was discovered that it wasn't just 40 cubic feet a minute of warm air being blown on the patient that could then be kind of diluted into the air of the operating room. It was 1,000 watts of heat, most of which becomes waste because only about 50 watts are absorbed. So about 950 watts of waste heat are expelled by a Bair Hugger unit under the surgical drape, escape near the floor of the operating room, and then rise, because waste heat rises on the outside of the drape, and in the process picks up organisms living on the floor and brings them up and puts them into the sterile surgical field above the table. And there's now 13 published studies showing that to be true, and 2 studies linking that contamination of the sterile field to a much increased infection rate for joint implant, so joint replacement surgeries, linking it to 74 and 78% in 2 different studies of joint replacement infections. So I would characterize the incumbent technology, forced air warming, as having a fatal flaw that can't be fixed. And we're in this perfect position of not having that problem and being the only safe and effective alternative to patient warming in the U.S., available on the U.S. market today.
Well, that's great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, that's a very, very good question. Just to reiterate, we're trying to move an incumbent technology out, and that's not an easy thing to do, but we believe that we're perfectly positioned for it because of our effectiveness, safety, and lower cost. We've got 17 issued U.S. patents on this to protect the space. And we're in this incredibly unique position of having basically a single competitor technology that has a fatal flaw. And we believe that when it gets moved out, which it certainly will, at least out of implant surgery, we're the only available replacement. So we're perfectly positioned, we believe, to take over what is estimated to be a $2 billion worldwide market for surgical patient warming. And we would love to have any investors talk to us that think that might be interesting. We believe we've got a great risk to reward ratio in that all of the startup risks that are standard to a startup are behind us now. And we still have this rather huge growth opportunity ahead of us that we believe we can monetize by selling eventually to some big company. The big companies are eager to acquire this type of technology. So we'd be happy to talk to anyone that would be interested.
So how best for listeners to get back in touch with you?
The easiest thing would be either through our website or through LinkedIn. I'm on LinkedIn, Scott Augustine, or my email is saugustine @augsurg, AUGSURG.com.
Great. Yeah, we'll put those in the show notes and look forward to having you back for a follow-up soon.
Well, I would love it. And thank you for this opportunity to talk to your listeners. Appreciate it.
Thank you so much. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.